Tough market continues to hurt the real estate industry. Credit rating agency CRISIL tells us that the number of developers being downgraded in the financial year is sharply higher than the same period last year. What's more, the ones worst hit are residential development companies. Amita Balachandra has put together this report with all the builders who have been downgraded and suspended this year. Take a look.
That's right. According to CRISIL, ratings of the last 6 months, that is between April 2015 to September 2015, has seen a lot of upgrades and downgrades in the real estate industry when compared to the previous fiscal. What's also emerging from this trend is that most of these players that you see right now are residential players. Now, this of course is evident of the fact that the last 1 year has not been very good for the residential real estate market. Now, of course, CRISIL Ratings has downgraded or suspended these builders simply because most of them have not been diligent in repaying their debt to their lenders. That's the biggest reason, of course, because their credit ratings and also because they may not necessarily pay heed to timely delivery of projects. So these are the two reasons. But of course, before figuring out whether it is worrisome at all, we must take a look at the rating scale. And although some of them have been downgraded, some ratings are not so bad and they're above the cutoff mark. So we must take a look at that before we make any decision.
And to give us a more perspective on what this means to you and me as home buyers, we have Ramashreya Yadav, CEO, Edelweiss Real Estate and Investment Advisory Services. Ramashreya, thank you so much for being with us. My first question to you, what does this mean for the industry? Why do you think there have been so many downgrades, particularly in the last 6 months?
One of the key reasons for this kind of rating downgrade has been specifically attributed to the fact that these projects have been failing to meet their deadline of completion. So that is the key reason which has pushed the credit rating agencies to downgrade. The second reason which could be attributed to this is because of the delays, the ability of developers to service the credit has been impaired. And the third reason is the developers have been into multiple projects, and because of that their balance sheets have been stretched. So these are basically the three reasons why we see the rating downgrades are more rampant in current situation.
Tell us, the reason why we have this conversation is that, the question that's in my mind is that should home buyers be worried? Give us a checklist of what one needs to do before shortlisting a builder.
Basically, when a home buyer is looking for buying a new property, or maybe a home buyer is the first time buyer of house, he should essentially look at 2-3 things. One is the brand or the franchise that he is going to buying in, because that's the key to delivery. And the second part would be looking at the project from the perspective of the regulatory permissions, at which stage the permissions have reached. And the third is the financial health of the developer. And if you combine all three, this is where it becomes very essential to look at a mechanism of rating of the particular project that would help essentially a first time buyer.
All right, Ramashreya, I'm going to let you go with that. But one last question. What is your outlook for the industry going forward from here on?
We are looking ahead in a next 12 to 18 months where, there will be more efficient offtake in the inventory. And we are also seeing that newer, the buyers are coming back in the market. Now, coupled with the regulatory environment which has been easing over a period of last 12 to 18 months, and now buyers are coming back in the market, I think there will be a lot of transparency coupled with the regulatory bill in real estate which is being talked about. Keeping all these three perspectives on the table, I think we would see more upgrades than the downgrades.
All right, Ramashreya Yadav of Edelweiss, thank you so much for taking time out to be with us. Now, we also have Manish Gupta, Director, CRISIL Ratings, joining us here on the news on Magic Bricks. Now, Mr. Gupta, thank you so much for being with us here. Tell us, why has there been this trend over the last 1 year?
So if you look at real estate sector per se over last 1 year, the demand in the real estate has been quite tepid. And there has been a substantial decline in the demand, particularly in the residential real estate segment, where we are seeing that the consumers, they are postponing their decisions to buy a property. So that is leading to a significant decline in some of the major real estate centers, which includes NCR, where we have seen the demand falling quite substantially. This has actually led to a deterioration on the cash flows of the developers, to an extent that today these developers have to depend a lot on refinancing these debt. It is more downgrades and less upgrades is what has been the trend. Somewhere close to 8 to 10% of these ratings, they have undergone rating actions, and that too on a downgrade. That is, the ratings have been revised to a lower level from what they were there in the earlier case.
You know, what I wanted to understand from you is the mechanism. How do you assess these ratings in the first place?
In order to assess these ratings, we typically look at assessing their business and financial profiles. So when I talk about business profile, I essentially talk about what is their track record in developing these projects, what kind of brand positioning that they are having, what kind of construction track record and construction efficiencies that these developers have, and what kind of booking track record that these developers are having. So this is something which consolidates into kind of a business profile for a particular real estate developer. Similarly, we also look at the financial profile of these developers to understand the level of debt which they are having on their books, and their ability to service that debt through the cash flows that they generate. So these are the two things that we typically look at from a financial profile perspective, and which gives us a sense on the credit quality of these ratings.
All right, one last thing again before we let you go. Do you see any improvement in these numbers going forward from here on?
Now, going forward, what we are seeing is that this demand improvement is not something that is likely to happen very quickly. Some of the territories, NCR, Bombay, and the southern territories, there we are seeing that the demand growth is still gonna be tepid and weak going forward. In addition to that, there is a high level of debt which these developers are having. And today, because of the lower demand and weakening of cash flows, what is happening is that the available cash for these developers to service the debt, that is actually lowering and weakening. So if I can measure it in terms of the cash buffer available with the developers, that cash buffer has actually weakened over last few years, and going at least in the near term, next 1 year horizon, we don't see any significant improvement in this cash buffer.
Manish Gupta, Director, CRISIL Ratings, thank you so much for taking time out to be with us here on the news on Magic Bricks Now.